Folks, today we are diving deep into three penny stocks that could explode in upcoming months. Companies that have the potential to make you rich if their upcoming developments play out the way Wall Street expects. These are not random names pulled out of thin air. These are stocks backed with solid fundamentals, a compelling future, and the kind of growth trajectory that could turn a small investment into something significant. So if you're serious about making money in the stock market, make sure to watch till the end and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. Your next big opportunity may be hidden inside one of these companies. The first on our list is Dolphin Entertainment Incorporated, ticker symbol DLPN, one of the most underrated and misunderstood diversified entertainment companies under the $5 mark. While most penny stocks struggle to build a real business model, Dolphin Entertainment stands out because it operates in a space where demand is rapidly expanding. Entertainment marketing, digital creator branding, lifestyle PR, and film and TV production. Dolphin owns some of the most highly respected marketing and PR agencies in Hollywood, including 42 West, The Door, and Surefire Media. These agencies work with world-class talent: actors, musicians, influencers, streaming platforms, film studios, restaurants, hospitality brands, consumer product companies, and more. The company is not sitting on potential. It is already deeply integrated into Hollywood and the broader entertainment ecosystem. What makes Dolphin especially interesting is the fact that it is not just a PR company and not just a production company. It is both. That means when they create campaigns, content, events, or branding strategies, everything happens under the same corporate umbrella, maximizing revenue potential across multiple divisions. Financially, Dolphin Entertainment has shown one of the strongest turnarounds in the micro-cap entertainment sector. For the most recent quarter, the company reported $14.8 million in revenue, which represents a 16.7% year-over-year increase. This is not a company shrinking or struggling. It is growing, and its agencies are winning larger and more frequent clients. Even more impressive is the profitability turnaround. Dolphin delivered operating income of $308,296, a complete reversal from the $8.2 million operating loss in the same quarter of the prior year. That is one of the most dramatic improvements you'll see from a company at this price level. When you adjust for non-recurring items, adjusted operating income reached $1 million, more than double what it was in Q3 of the previous year. The net loss narrowed substantially to only $365,494, compared to an enormous $8.7 million loss in Q3 2024. For shareholders, the diluted loss per share improved from 80 cents to 3 cents, proving that Dolphin is not just stabilizing, but genuinely improving. This kind of financial trajectory is what analysts look for when anticipating explosive growth. DLPN is currently trading around $1.71, but analysts covering the stock have issued a price target of $5, representing a potential 192.4% upside from current levels. What's important is not only the upside, but the logic behind it. Dolphin's revenue is diversified. Its agencies are stable and well-respected, and its entry into new markets like sports and influencer marketing positions it for accelerated growth in the digital era. This is the type of penny stock that doesn't rely on hype, but instead relies on real business operations that compound over time. The second stock on our explosive list is Black Diamond Therapeutics, ticker BDTX, a clinical-stage precision oncology company that is developing a radically different approach to cancer treatment. While thousands of biotech companies try to build cancer therapies, Black Diamond's Master Key platform makes it stand out. Instead of targeting a single mutation like most companies do, Black Diamond develops drugs that target entire families of cancer-driving mutations. This means instead of being limited to small patient groups, the therapies could apply to much broader populations. Their lead candidate, BTX 1535, is a next-generation brain-penetrant EGFR inhibitor designed for non-small cell lung cancer, NSCLC, and glioblastoma, two of the deadliest cancers with extremely limited treatment options. Financially, Black Diamond is in a far stronger position than most penny stock biotechs. As of the latest quarter, the company held $135.5 million in cash, equivalents, and investments, up sharply from $98.6 million at the end of 2024. That means they have a solid financial runway to continue funding their clinical trials without worrying about immediate dilution or emergency capital raises. The company also reported substantial improvements in cost management and operational efficiency. Net cash used in operations fell to $7.9 million, compared to $11.3 million last year. Research and development expenses dropped to $7.4 million from $12.9 million, largely due to strategic restructuring and focusing more on their highest potential drug assets. Even G&A expenses declined sharply to $3.5 million from $5.2 million, showing the company has become much leaner. The bottom line improved significantly as well, with net loss decreasing to $8.5 million, compared to $15.6 million in the year prior quarter. This financial improvement signals not only stronger efficiency, but also better long-term sustainability. With many biotechs, the biggest risk is running out of cash before hitting major milestones. Black Diamond is not in that situation. The company is well-funded and strategically focusing its resources on therapies that could become breakthrough treatments. BTX currently trades around $3.80, but Wall Street analysts have issued an average price target of $8.67, representing a potential 128.16% upside. The highest analyst target sits at $11, which is nearly a 200% potential gain. Last on our list is Compass Pathways plc, ticker CMPS, one of the most disruptive and forward-thinking biotechnology companies in the mental health space, and a company that Wall Street believes could multiply in value over the next year. Compass is the global leader in developing regulated psychedelic-based medicines, specifically its synthetic psilocybin formulation known as COMP360, which is combined with a structured psychological support protocol. While psychedelic medicine has gained a lot of attention, Compass stands out because it is actually conducting Phase 3 clinical trials, making it the most advanced company in the world in this field. Financially, Compass Pathways is investing heavily in clinical trials, as expected for a company at this stage. For Q3 2025, the company reported R&D expenses of $27.3 million, down from $32.9 million, due to the termination of early-stage discovery programs and streamlined staffing. Meanwhile, for the 9-month period, R&D spending was $88.5 million, slightly higher due to continued investment in Phase 3 trials. General and administrative expenses dropped to $13.2 million from $15.0 million for the quarter, again due to restructuring and cost-saving measures. The 9-month G&A total increased slightly due to legal and financing expenses associated with their January 2025 capital raise. The company posted a significant quarterly net loss of $137.7 million, but this was primarily due to a $101.3 million non-cash loss from warrant liability adjustments, an accounting issue driven by share price movements rather than operational weakness. For the 9-month period, the net loss was $194.0 million, compared to $111.8 million last year, again heavily affected by non-cash accounting adjustments. Importantly, Compass ended the quarter with $185.9 million in cash and equivalents, up from $165.1 million at the end of 2024, ensuring strong liquidity as Phase 3 trials progress. Debt remains modest at $31.3 million, only slightly higher than the previous year. Wall Street analysts are extremely bullish on Compass Pathways. Based on ratings from 5 analysts, the average price target is $21, with a high forecast reaching an incredible $40 and a low forecast of $12. Considering the current share price of $5.17, the average target implies a 306.19% upside, making Compass one of the highest upside stocks in the entire small-cap biotech sector. Well, that concludes our list of 3 penny stocks that have the potential to explode in the coming months. Companies backed by real fundamentals, powerful catalysts, and strong Wall Street confidence. Dolphin Entertainment is scaling fast in the entertainment and digital branding world. Black Diamond Therapeutics is innovating cancer treatment in ways that could transform oncology, and Compass Pathways is leading the charge in the next generation of mental health treatment. These companies may be trading at low prices today, but their future potential is massive, and investors who position themselves early could see life-changing returns if their growth trajectories continue. If you found value in this breakdown, make sure to subscribe, turn on notifications, and stay tuned for more deep dive stock analysis on the hottest opportunities in the market.